Welcome back to More Than Commas, the podcast where we talk about building a great life, not just a great balance sheet. I'm Cory Shepard, and today's topic is something that touches nearly every American household, the new One Big Beautiful Bill. Signed into law on July 4th, this sweeping piece of legislation redefines how we save, spend, and get taxed. So whether you're a parent or a student or a retiree or just someone trying to make smart financial choices, you'll want to stick around. And if you find this helpful, please don't forget to like, subscribe, or share with someone you care about. All right, let's jump in with some of the biggest changes. First, Trump accounts for newborns. If your child is born between 2025 and 2028, the government will deposit $1,000 into a new Trump account, a tax-advantaged savings account managed by the U.S. Treasury. You can contribute up to $5,000 per year, and employers can contribute up to $2,500 tax-free. Funds can be used for higher education, job training, or a first home at age 18. But while the law is passed, the rules aren't finalized yet. So keep your eye on Treasury guidance. This is one to watch for sure. Next, 529 plan expansions. 529s are now more powerful. You can use up to $20,000 annually towards K through 12 tuition. There's additional workforce training and certification costs that qualify for $529. You can now use up to $10,000 in student loan repayment per beneficiary. Now, this one's tricky. It's a lifetime limit per person. So if you've used $10,000 towards one child's student loans and you want to help another one, you would have to change the beneficiary to use another $10,000. But let's also be cautious because in states like Massachusetts, these expanded uses might not be considered qualified, which could mean taxes or recapture of deductions based on the state that you're in and how this new law is interpreted. So if you've used a 529 in a creative way, we would really love to hear your story. So please share in the comments below. Next up, ABLE account enhancements. These Roth-style savings accounts for individuals with disabilities now offer permanent rollovers from 529s and access to the Savers Credit. This one's a low visibility change with high impact for families who need flexibility and long-term support.
This episode of More Than Commas is brought to you by Sound Financial Group, where we help families and business owners build and protect wealth through clear, long-term financial strategies. Whether it's retirement planning, investment management, or navigating your overall financial strategy, we're here to help guide you every step of the way. To learn more about how we can help you secure your financial future, visit sfgway.com. You can run retirement calculations and download content to read in your own time.
Now let's hit some practical day-to-day updates that might affect your tax return or paycheck next year. The SALT deduction cap is now increased. This is the deduction for state and local taxes, which has been lifted to $40,000 effective 2025 through 2029. However, there's a phase out. This deduction starts phasing out at $250,000 modified adjusted gross income for individuals or $500,000 MAGI or MAGI for married couples. And that's fully phased out shortly above those thresholds. So if you live in a high tax state, this could significantly reduce your tax bill or not, depending on your income. Are you in a state where the SALT cap was hit hard? Do you think this fixed it? We'd love to hear, so please let us know in the comments. Next up, tax-free tips and overtime. Starting January 1, 2025, up to $10,000 in tips and 250 hours of overtime can be excluded from federal income tax. But again, there's a phase out. That phase out starts at $200,000 single or $400,000 joint modified adjusted gross income, and it's fully gone by $250,000 single or $500,000 joint MAGI. This aims to reward middle-income workers who put in those extra hours, especially in service and trades industries. Next, senior standard deductions increased. Americans age 65 and up will get an additional $6,000 standard deduction starting in 2025. Simple, effective, great for retirees who no longer itemize. Next, auto loan interest deduction, again with a phase out. For the first time in decades, auto loan interest is deductible, up to $10,000 a year, beginning in 2025. But here's the fine print. The deduction starts phasing out at 100,000 MAGI single or 200,000 joint, and it's fully gone at 150,000 single and 250,000 joint. That deduction reduces by $200 for every $1,000 over the threshold. So do you think this will help everyday families or just complicate things? Comment below. We'd love to hear your take on that. Next, the green energy credit phase out. If you're planning solar panels or an electric vehicle purchase, move fast. Solar credits end December 2025, EV credits vanish September 2025, and EV charger credits are phased out by June 2026. And there's no phase outs, just these deadlines. Next up, HSA and FSA enhancements. Starting in 2026, HSAs permanently include telehealth and mental health as allowable reimbursed expenses, and dependent care FSAs have permanently raised caps, which is great news for working parents. Here's what to do next. Review your 529 plans and how new qualified expenses might apply to you. Watch out for the Trump account rollout. It's law, but not yet live. Understand how phase-outs affect you for tips, overtime, SALT, and auto deductions. Be alert to sunsetting green energy credits because timing really matters. Finally, if you have any questions, reach out to us at Sound Financial Group to see if our philosophy resonates with you. We love helping families plan with intention, not emotion, and we'd love to see if any of these new changes to our laws impact you or have any benefits to your family. If any of these provisions hit close to home or confuse you or excited you, please comment below and let's talk about it. And of course, if you found this helpful, share it with a friend and subscribe for more insights on how to build a truly great life. Thanks for joining me today on More Than Commas. That's it for this episode. Now get on back to building a great life.